Hi guys, welcome to the second segment of Voices of DD, and we're lucky to have Mr. Mike Charney with us today. Thanks for coming on the show, Mike.
Trent, thanks for having me on the program.
No problem. So Mike had a really unique experience, very different from some of the traditional jobs that double degrees tend to have. Mike worked for a company called Pace Oil and Gas. They're a $450 million market cap company. They've got plays in Alberta and in Saskatchewan. They specialize in exploration and production. So thanks again for being on the show. What's going to be really unique about Mike's job is not only was it a very interesting industry, but he got to do a lot of finance work and modeling for that company. So maybe you could give us a bit of background about the company and what you were doing on the job.
Okay, so yeah, Pace is a mid-sized oil and gas company focused in Calgary, Alberta. As Seren said, they have oil and gas exploration in Alberta and Saskatchewan. And my role at Pace was basically twofold. The first role was doing a comparable analysis. So my boss, the VP of Finance, handed me a list of 16 other mid-sized oil and gas companies, and he said, I want you to track these. And he gave me a model originally. Later on in the co-op term, I built my own model that sort of dealt with things quarterly as opposed to only looking at years in isolation. So that was one role, and I'd update that every time a company put something new on CDAR. If you've ever worked in finance, you probably know what CDAR is. It's where all public companies have to file their reports. So I'd look through CDAR every day to see if anyone's made any updates. And along with that comparable analysis, I presented all of the information graphically. So I modeled all of their cash flows, and if you know anything about oil and gas, a lot of their reserve structure I had to deal with. And I made graphs for basically everything you'd ever want to know about an oil company. And those would go to the board meetings, just to hand out in the board pamphlets for when the board of directors was making decisions. And also, because we were a mid-sized company, we had our CEO and CFO had to really get a lot of interest in our shares. And so they'd go on road trips all the time to Chicago and New York, and I would give them a big list of graphs that sort of highlight how undervalued Pace was. Ticker PCE, trading on the Toronto Stock Exchange, really good stock. So yeah,
look at him selling, I'd be a salesman for his stock over here.
I would give the CEO and the CFO a big list of graphs that they would pass off to institutional investors, and that would help with the sale of our shares, I hope. And then the second role that I had, aside from all the comparable analysis, was looking at companies that we should buy. A lot of the way a lot of oil companies grow is just by buying other smaller companies, like the bigger fish eats the smaller fish sort of thing. And so I was always looking at companies to see what our financial statements, what our cash flows, what our reserves would look like if we took them over, if we performed an acquisition on them. And I'd look at maybe one company every couple of weeks. My boss would give me the name of the company. During the month of March, we actually were in pretty seriously looking at one company, so I got to work with my boss, the VP Finance, and the treasurer, and really go through some detailed financial modeling to try and see what this deal would look like if it went through. We did put a bid in on it, but it wasn't accepted, so we didn't get to see anything there. And going into the co-op term, because Pace is a mid-sized company, it's fairly small, only about 150 employees in the downtown Calgary office. The CFO told me that if we did have any sort of deal work going on, if we had an acquisition, I would have got to work on it. So I was quite lucky to see a little bit of the initial stages of how a deal goes down in the oil and gas industry. But as I said, it didn't really go through.
So I guess one of the amazing things, I remember when you were telling me about your job, what really struck me is that not only is this very much a finance position, but you need to know so much about general business. Your knowledge of the market, your knowledge of industries and how they work, that really must have been enriched by this particular job.
Yes, definitely. And the oil and gas industry is a bit different because all the companies are directly affected by the price of oil. And having that direct exposure, you really have to pay attention to what's going on with other oil companies, but also what commodity prices are doing. So when I was in the co-op job, this was January 2011 to April 2011, and that was right when everything was going on in Middle East, North Africa with Gaddafi and all of the regimes falling, and you could see the price of oil changing, reflecting that geopolitical risk. I got to read a lot of research reports from investment banks that only deal in the energy sector, and one of the good ones, First Energy Capital, I remember one of the research reports was them explaining how all the changes that were happening there was priced into the price of oil on West Texas and North Sea Brent prices. And they were saying that during the height of the whole Libya thing, they were adding $10 of geopolitical risk to each price of oil, to each barrel, sorry. And so you really have to look at that sort of stuff. My job in particular, that probably wasn't as necessary. That's the people higher than me who had to know that, but it was still definitely interesting to follow the markets and see how.
So hands down, one of the most interesting jobs that Double Degree's had. So I guess the next question I have for you is, how does someone in Double Degree get a position like this?
Well, I got this position on my own. It wasn't on JobMinder or on Navigator. I'm originally from Alberta, so I had a connection with the CFO of the company. But in order to get involved in a company of this size, because it was quite small, I know I call it mid-size, but it was actually pretty small compared to all the other companies that other double degrees work for in the co-op semester. And a lot of those companies aren't going to go to University of Waterloo or Laurier, especially in other provinces. I mean, I think there were maybe 3 jobs on Navigator that were in Alberta, and they were all massive, massive corporations. Like one of the big oil companies, Shell, I think they had a posting. So for something this size, you really have to use your personal networks to get it. Or, I mean, cold calling works. There's no getting around that. If you want to just start cold calling, you can do that.
Mike brings up a really, really good point. Like, one of the things we're going to stress in some of these segments is that it's not always the big name jobs that are going to get you the best experience, but the mid-sized companies that are a little harder to get, like as you said, you have to cold call or look on your own, but those mid-sized companies is where a lot of learning experience does occur. Really good, valid point. So the last thing we want to bring up is a little more, controversial, and then everyone has their, a feeling when it comes to oil companies. Generally, people say that, they're not environmentally friendly, they're doing all this awful, terrible stuff to oil companies, and a lot of people have that sort of personal vendetta against them. You worked for them. Are those, is that stereotype true? And if not, can you tell me what it's actually like?
Well, yeah, I mean, I might be a little biased because my dad and, most people in my family, they all work for oil companies, and I worked for an oil company on a co-op term. So I understand where the stereotypes are coming from, but I think what a lot of people don't realize is that the level of transparency for oil companies in Canada is #1 in the world. I mean, you can compare us to Saudi Arabia, and some people will say, well, Saudi Arabia doesn't have as many oil spills as Canada. Well, they probably have far more. It's just that they don't report it because they don't have to report it. So all Canadian oil companies really do give back to the environment. My company didn't have any plays in the oil sands in northern Alberta, but that's one of the big up-and-coming controversial issues. And every company that goes to drill in the oil sands, they have to have a plan that's approved by the Alberta government, a reclamation plan. So they're going to say how many acres of land they're actually going to disturb, and because of the advances in drilling, in order to have coverage on a massive area, they only really need to disturb a very small portion of land, because they do something called horizontal drilling, where they go in and use a lot more.
Just not disturbing as much.
Yeah, not disturbing as much of the land. And again, they have to have a reclamation plan where they say, I'm going to disturb this many acres, and I'm going to have them reclaimed, plant my own trees, restore all of the water sources, all the water tables by this year. And that has to be approved. It's not like a company can just go in and do open pit mining like you see in China. So in terms of the stereotypes, definitely the environmental aspect, all companies put money towards it, and not even the oil sands companies. The oil and gas industry is inherently a dirty business, and all oil companies recognize that fact. You can't just be naive and think that it's not a dirty business. But all oil companies are also giving, you know, a lot of their profits to local causes. I know my company Pace did quite a bit with Habitat for Humanity, a lot of food banks.
I guess every company's going to have their stereotypes, but I mean, the business is of a certain nature, and they're doing as much as they can to try to make up for it by donating to other causes. And the honesty that you just displayed to say, acknowledgement, it is a dirty business, but we're doing a lot to make sure that we can get out of that.
Yeah, and that's what I got out of it. I mean, only working for an oil company for 4 months and sort of being in an analyst position like that, you don't hear a lot of the big politics that go on. But if this interests you, there's a great book you can read. It's called Ethical Oil by Ezra Levant, Canadian lawyer. It sort of paints the other side of the whole oil sands debate.
So if you have any more questions or any information you want to get about working in an oil company or working in modeling, working in finance, Mike Charney is a great guy to get in contact with. So hope you enjoyed this segment. We'll see you at the next one.
Thanks, Rick.